This is Paul Donovan from UBS's Global Economics Department. US Senator John McCain has promised to stop campaigning until the current financial system crisis and the bank bailout is resolved. There was a joint statement from Senators Obama and McCain recognizing how bad things have gotten. Of course, financial markets have not exactly had their attention focused on the presidential campaign, pitting two individuals with little economic background against each other. However, it's nice to know that some politicians realize that there is a problem. Comrade General Secretary Bush was last night explaining why socialization of the banking system's problems was the only solution, and he was using some pretty bleak language to describe the economy. Welcome to Japan, 1995. Money markets have ceased to function effectively. Banks will not lend to one another. Politicians are delaying and jockeying for personal political advantage. Only now, it's the largest global economy that is impacted in a world that is more interlinked than in the past. We believe that a bailout will be passed before the adjournment of the current session, which suggests something in the next few days. House and Senate members meet at 10 a.m. Eastern Standard Time today to discuss the bill, and Congressman Frank is saying that the Democrats in Congress have reached an agreement. There will doubtless be a few populist add-ons to the legislation, but the bottom line is that support for banking is necessary if capitalism is to keep on going. In other words, socialization will save capitalism. It is difficult to assess the consequences if there were to be a further delay, but undoubtedly the longer this drags on, or the longer investors fear it may drag on, the longer the ensuing economic downturn. Already the reaction of money markets has effectively negated the stimulus impact that will come from our forecast of a 50 basis points easing of the Fed funds rate later this year. A week's delay to the package could perhaps add another quarter to the economic weakness that we experience, given the likely adverse reaction of the banking sector. Real economic data is still not good, and bear in mind this predates the current crisis. Japan's August trade numbers showed the 12th consecutive decline in exports to the United States and the largest percent drop since 1984. Arguably, this is the worst economic situation the U.S. has been in since Ronald Reagan's memorable brace of recessions in the early 1980s, so it should not be a surprise. Export growth to Europe turned negative, exports to China and to Asia softened. Japanese car sales to Russia and the Middle East were the only bright spot. Japan is also buying less than expected from the rest of the world. Japanese import numbers were weaker than had been anticipated. In other words, Japan's trade numbers are confirming the global slowdown, which needed little confirmation, and ridiculing the idea that there is decoupling anywhere. Some economies may slow less than others, and we certainly believe that, but they all still slow. Today we've got European M3 money supply for August, which will give us some idea of the attitude of the European banking sector through all of this. With Europe all set to enjoy its second quarter of negative economic growth, and the European Central Bank actually deliberately trying to make the financial and economic crisis worse by preventing balance sheet repair, credit growth in Europe is not without interest. German consumer confidence is also due, covering the latest month. That's all for today. Have a good day.